Switching to an S-Corp saved me $8,000 in self-employment tax last year. But here's the thing, an S-Corp isn't right for everyone, and if you set it up at the wrong time or with the wrong income level, it can actually cost you more in fees and headaches than you save in taxes. So today, I'm breaking down sole proprietorships, LLCs and S-Corp. I'm going to show you exactly how each one is taxed, run the real numbers on $100,000 income, and tell you the break-even point where S-Corp election starts making sense. Let's get into it. First, let's get clear on what we're actually talking about. When you start making money on your own, whether it's freelancing, consulting, creating content, or selling products, you need to decide how your business is structured. This decision affects how you file taxes, what you pay, and how much paperwork you're dealing with. The three most common structures for solo entrepreneurs and small businesses are sole proprietorship, LLC, and S-Corp. Now, I'm going to explain each one, but I want to be clear, this is general tax education, not personalized tax advice. Your specific situation might be different, and you should absolutely talk to a CPA or tax professional before making any decisions about your business structure. Also, there's a difference between your legal structure and your tax classification. An LLC is a legal structure created at the state level, but for tax purposes, an LLC can be taxed as a sole proprietorship, a partnership, an S-Corp, or even a C-Corp. So when people say LLC versus S-Corp, they're usually comparing an LLC taxed as a sole proprietorship to an LLC taxed as an S-Corp. I'll clarify this as we go. Sole proprietorship. Let's start with the simplest structure. Sole proprietorship. If you start freelancing or doing business under your own name and you don't set up any formal entity, you're automatically a sole proprietor. No paperwork required. From a tax perspective, all your business income flows directly to you personally. You report it on Schedule C of your Form 1040. Your profit is subject to income tax at your normal rates, and here's the big one. You pay self-employment tax on all your net profit. Self-employment tax in 2026 is 15.3%. That covers Social Security, which is 12.4%, and Medicare, which is 2.9%. This is how self-employed people pay into Social Security and Medicare, the same systems employees pay into through payroll taxes. So if you make $100,000 in profit as a sole proprietor, you're paying self-employment tax on that full $100,000. That's 15.3% of 92.35% of your net income, which works out to about $1,430 in self-employment tax, plus income tax on top of that. The advantages of sole proprietorship? It's simple, it's free, and there's minimal paperwork. The disadvantage? You're paying self-employment tax on every dollar of profit. LLC basics. Now let's talk about LLCs. An LLC, or limited liability company, is a legal structure you create by filing paperwork with your state. The main purpose is liability protection. If someone sues your business, they generally can't come after your personal assets. By default, a single-member LLC is taxed exactly like a sole proprietorship. Your income flows through to you, you file Schedule C, and you pay self-employment tax on all your profit. The tax treatment is identical. The difference is the legal protection and the perception. Having an LLC can make your business seem more professional, and it provides that liability shield, though you should still have proper insurance. The cost of an LLC varies by state. Some states charge a couple $100s to file, others charge more. California, for example, has an $800 annual franchise tax for LLCs, so you need to weigh the cost against the benefits. But again, from a pure tax perspective, an LLC taxed as a sole proprietorship is the same as being a sole proprietor. You're still paying self-employment tax on all your profit. S-Corp taxation. This is where things get interesting. An S-Corp isn't a business structure you create at the state level like an LLC. It's a tax election you make with the IRS. You can elect S-Corp status as a sole proprietor, or more commonly, as an LLC. Here's how S-Corp taxation works and why it can save you money. When you're taxed as an S-Corp, you become an employee of your own business. You have to pay yourself a reasonable salary for the work you do. That salary is subject to payroll taxes, which are the employer side equivalent of self-employment tax. So you're still paying Social Security and Medicare on that salary. But here's the key. Any profit above your salary is distributed to you as a distribution, not wages. And distributions are not subject to self-employment tax or payroll taxes. You only pay income tax on them. So the strategy is to pay yourself a reasonable salary, cover the payroll taxes on that, and then take the remaining profit as distributions, which avoid the 15.3% self-employment tax. Let me show you a real example with numbers. The $100,000 comparison. Let's say you have $100,000 in net profit for 2026. We'll compare sole proprietorship and S-Corp side by side. As a sole proprietor or LLC taxed as a sole proprietor, you pay self-employment tax on the full $100,000. That's 15.3% of 92.35% of $100,000, which equals about $14 to $130 in self-employment tax. Then you pay income tax after the $9,230 deduction for half of your self-employment tax and the $15,000 standard deduction for a single filer. Your taxable income is about $75,170. Based on 2026 tax brackets, you're paying around $11,900 in income tax. Total tax, about $26,930. Now let's look at S-Corp taxation. You need to pay yourself a reasonable salary. What's reasonable depends on your industry and role. The IRS doesn't have a specific formula, but a common guideline is 40–60% of your profit if you're the only employee. Let's say you pay yourself $60,000 as a salary. On that $60,000 salary, you pay payroll taxes. As the employer and the employee, you're paying both sides of Social Security and Medicare, which is 15.3%. That's about $9,080. The remaining $40,000 is distributed to you as an S-Corp distribution. You pay zero self-employment tax on this $40,000. Now for income tax, your $60,000 salary plus $40,000 distribution equals $100,000 in income. After the standard deduction of $15,000, you have $85,000 in taxable income. That's about $13,800 in income tax for 2026. Total tax, $9,180 in payroll tax plus $13,800 in income tax equals $22,180. Compare that to the sole proprietor total of $26,030. The S-Corp saves you about $3,050. But wait, there's more. If you're aggressive and pay yourself a lower salary, say $50,000, the savings increase at $50,000 salary and $50,000 distribution. You'd pay about $7,650 in payroll taxes. Your income tax would be slightly higher because you lose some of the self-employment tax deduction, but you'd still save around $5,000 to $6,000 total. However, and this is critical, your salary has to be reasonable. The IRS can challenge you if they think you're paying yourself too little to avoid payroll taxes. There's no magic number, but going below 40% of your profit is risky. When does S-Corp make sense? So, should you elect S-Corp status? Here are the factors to consider. First, income level. The general rule of thumb is that S-Corp starts making sense when your net profit is consistently above $60,000 to $80,000 per year. Below that, the savings might not outweigh the extra costs and complexity. What extra costs? S-Corp require payroll processing. You'll need to run payroll for yourself, which means payroll software, or paying a payroll service, usually $500 to $2,000 per year. You'll also need to file a separate business tax return, Form 1120S, which is more complex than Schedule C. Many people hire a CPA for this, which can cost $1,000 to $3,000 or more. So if you're saving $3,000 in self-employment tax but spending $2,000 on payroll and accounting, your net benefit is only $1,000. That might not be worth the hassle. But if you're making $150,000 or $200,000, the tax savings can be $10,000 to $15,000 or more, which absolutely justifies the extra costs. Second consideration, consistency of income. If your income fluctuates wildly, S-Corp can be harder to manage because you need to run regular payroll. If you're not sure you'll clear $60,000 this year, it might make sense to wait. Third, state taxes. Some states don't recognize S-Corp status or have additional fees for S-Corp. Check your state's rules. And fourth, there are other tax implications. S-Corp can affect your qualified business income deduction, retirement plan contributions, and other tax strategies. This is why you need to run the numbers with a tax professional who knows your full situation. All right, let's bring this all together. Sole proprietorship is the default. It's simple, it's free, and if you're just starting out or making less than $40,000 to $60,000 per year, it's probably fine. You'll pay self-employment tax on all your profit, but the simplicity is worth it. An LLC gives you legal protection and professionalism. From a tax perspective, it's the same as sole proprietorship unless you make a different tax election. The cost varies by state, but it's usually a few $100s. S-Corp taxation can save you thousands in self-employment tax, but it comes with extra costs and complexity. It generally makes sense when your net profit is consistently above $60,000 to $80,000, and the savings outweigh the costs of payroll and accounting. Here's what you should do. First, calculate your actual net profit for the last year, or what do you expect this year. Second, run the numbers. Compare the self-employment tax as a sole proprietor to the payroll tax and distributions as an S-Corp. Third, factor in the costs of payroll processing and tax prep. And fourth, talk to a CPA. Seriously, this is a decision where a couple $100s in professional advice can save you thousands. If you found this breakdown helpful, subscribe to Tax Strategy Lab. I'm creating content to help self-employed people, freelancers and small business owners understand taxes and keep more of what they earn. No hype, no fluff, just the information you need. Drop a comment and let me know what business structure you're using and whether you've considered switching. I'd love to hear your experience. Thanks for watching, and I'll see you in the next video.